Happy Monday, traders. It's never a dull moment in markets. We saw some huge moves in the US session on Friday. And the culprit for these big moves, surprise, surprise, was Trump. So what we did learn on Friday is that China was apparently putting export controls on rare earths. Now, rare earths very important. They're used in lots of different things. For example, everything from EV batteries to smartphones, and even to military missile systems, etc. And China actually basically has 90% of the supply of rare earths. So pretty much a monopoly on those. So when Trump found out that China was looking at export controls on rare earths, he had a fit, and he basically said that he was going to put 100% tariffs on China starting November the 1st if this does not get worked out. So China at the moment has an average tariff rate around about 55%, so adding 100% on that obviously doesn't look good. It'd probably stop trade between US and China, and that's what obviously got the market and the world all worried that the two biggest economies in the world were going to start a trade war again. So what we saw S&P, NASDAQ, which have been raging bull markets, get hit violently. So S&P and NASDAQ closed the day, down around about 3.5%. We saw over a 200-point move lower in S&P and almost a 1,200-point move lower in NASDAQ, and for both of them to close on the extreme lows. But it wasn't equities that had the real bloodbath. The real bloodbath was actually in the crypto markets. In 24 hours, the crypto market saw the biggest record liquidation. So in crypto, we saw $19 billion of leveraged funds get totally wiped out. So that's 1.6 million traders' accounts went to zero. So a lot of, you saw Bitcoin down in one day, 20,000, went almost back down to 100,000. But a lot of the altcoins, some of those lost anywhere between 50, 80%. So an absolute bloodbath in crypto, and obviously a lot of traders, as we just mentioned, record amount liquidated. So not pretty on what happened on Friday. Now, over the weekend, we did get some news, obviously, that started to appease the situation and some positivity. So what we did hear from China was that the export controls would not affect civilian supply of rare earths, and that it was mainly more centered or focused on supplying for military use. Then we heard from Trump. He tweeted that he and Xi had a bad day, and that President Xi himself did not want to destroy each other's economies. They didn't want to have depression, and that he was confident that they could work it out. So on Monday morning, we've seen a huge gap open this morning. S&P has gapped open well over 100 points. NASDAQ's gapped open 500. So any of those traders that were short going into the weekend, now it's their turn to be heard. So no doubt, again, there's a lot of traders who are probably not enjoying what is going on with these huge moves, and now this gap open on Monday. And crypto has bounced as well. You got Bitcoin back over 15,000. So a lot of those crypto accounts that have been liquidated are probably watching this with tears in their eyes. Now, on some other markets, obviously, the big focus obviously has been a lot of precious metals. The weekly close for those was actually very good. We had gold closed above 4,000, obviously a big psychological level, and also silver closed above $50, which is a big psychological level. No doubt, obviously, gold does love this sort of volatility and negative volatility and uncertainty, and obviously what's going on with Trump's potential tariffs. And one of the things to note is that Trump still has not walked back the November 1st deadline of 100% tariffs, so that is still hanging out there. But obviously the positive comments that he does think that it will be resolved. So let's see. But in any case, look, gold is doing exactly what it's been doing for a long time, and Monday morning it is going up. So I wouldn't be in a hurry to sell that at the moment. Moving along, in the currency space, I mean, Aussie did get absolutely smashed. We've had recent highs, those yearly highs around 67 cents. It closed below 65 cents. So we've had a huge retracement in Aussie. I do think anywhere below 65 is probably the level to start picking up some Aussie. Definite bias there, especially that we're seeing a big rebound in risk so far this morning, and the fact that this probably will get resolved, this issue. That is obviously going to be a positive for Aussie, and it won't be trading at 65 cents if this is resolved. So I think you've got some cheap Aussies longs at market at the moment. This week, or today, is a holiday in Japan. They are out. It's a holiday also in US and Canada, Columbus Day in the US. So we're not going to see any bond tradings. They are closed, but equity markets will be open. So we will see, obviously, very important market reaction tonight in the US to what's been going on. This week is pretty quiet week as far as economic data and risk events. There is some Aussie employment data on Wednesday. That's going to be important for the RBA decision for November, and also obviously for local markets if you're trading the Aussie dollar and ASX. And we're also going to hear from Powell again, so no doubt market's going to be tuned in for that. But the market has priced in Fed Fund futures end of this month. Pretty much, it's almost up at 95, 100% that they're going to see a back-to-back rate cut by the Fed. So I'm not sure that, and obviously what's going on with the market turmoil probably even cements that even more. So I'm not sure how Powell could move the narrative or market pricing, at least for this coming Fed meeting. Other than that, look, at the moment, obviously, the market is still digesting exactly what happened on Friday, because they were huge moves. As we said, there was a lot of blood on the street. So we need to see how the dust settles and exactly where risk ends up. But one thing certainly is that I'd be surprised if we don't make any new record highs, especially in the equity space in the short term. Let's see how it pans out. But certainly that rejection from those record highs was pretty violent. So I'd imagine if we get anywhere close to that, those sort of levels or 1% or 2% away, might be in the short term a decent sell level. Good luck with your trades, and we'll catch back in with you shortly.